This is $1,000, and while it may not look like much on video, this represents 274 Starbucks lattes, 35 tanks of gas, or a 67-month subscription to Lord of the Rings Online. Or this could be the beginning of a beautiful investment portfolio that pays monthly dividends, and that is exactly what we're going to be talking about in this video. What's up, guys? I'm Mike, and normally my wife Brittany is here with me, but she's out working today, and her job hasn't been nearly as affected with everything going around. Plus, we're going to be talking about numbers and ticker symbols a lot today, and Brittany's not all that interested in talking about all that stuff. So I want to go over a few things in this video. Number one, I want to go over what our objectives are for our investment portfolio. Number two, I want to go over what our portfolio is going to be a combination of, like what's going to be in it. And number three, our criteria for picking what exactly is going to be in it. So if you're brand new here, welcome to the channel. Hit that subscribe button if you're interested in these types of videos or just personal finance videos in general. But if you haven't been following the channel, I'll give you more or less a TLDR of what my wife and I have been doing over the past few years. So we have been stockpiling money. We've been saving money for a house. We are currently in our new house. And now that basically our short-term financial goals have been met with this house, we want to transition from saving for a house like crazy and using all of our money to just put, stockpiling savings, to using all the extra money we have to just throw at investments. Our main goal is to create a portfolio that, number one, grows in value year over year, and two, pays us monthly dividends that we can slowly start living off of in the future rather than having to work for the rest of our lives. So there are many ways of investing, and the way my wife and I are going to be investing is by no means the only way to invest. I'm not a professional financial advisor. Don't take this as professional financial advice. This is how one dude on the internet is investing his money. That's pretty much all it is. So with that being said, our ideal growth rate year over year is going to be hopefully between 10 and 12%, maybe even more than that if we can find something that grows more than that year over year. We're going to be looking at companies with strong track records into the past up until currently. And we're also looking at companies that pay between 2, 3, 4, 5% dividend yields, maybe even more depending on what type of company it is, or like if it's an ETF or a REIT or something like that. Which brings me to my next point of this video, is what we're going to be investing in. What specifically we're going to be investing in. Number one, we're going to be investing in ETFs. Now, if you're not familiar with ETFs, ETFs are exchange-traded funds. Exchange-traded meaning you can trade them in the open stock market. You can buy at a price and sell at another price. A good example of this would be what's called SPY. It's an ETF of the S&P 500 index. ETFs are basically just a collection of stocks of companies that are in like a general market sector of the market, or it could just be a broad ETF of an overall index in general, S&P 500 for example. The second thing our portfolio is going to consist of is REITs. Now, REITs stand for Real Estate Investment Trust. My wife and I love real estate, but we have really no interest in being landlords and managing multiple units and managing tenants and things like that. So REITs are the next best thing. So we can buy into what are called REITs, and then we own a portion of these huge, real estate firms and things like that. The third thing our portfolio is going to consist of is bonds. Now, bonds are generally a lot less risky than individual stocks, so we're going to have a certain portion of our money invested in bonds. So while we're not going to gain a lot of money with those, we're not going to lose a lot of money either if the market tanks. And those are pretty much just going to be like a safe place to store a portion of our portfolio. The fourth and final thing our portfolio will consist of is individual stocks. And if you're watching this, you probably already know that stocks are just individual pieces of a company that are put out there in the open market for investors like myself, or probably a lot of you, to purchase. Out of everything that our portfolio is going to consist of, individual stocks are probably going to be the most risky. Maybe a tie with REITs, but we'll see. Aside from all this that we're doing, we're also going to plan on investing in companies that we're actually using day to day. So for example, my wife and I have AT&T as a service provider for our phones. Their growth over the past 10 years is not all that crazy, but since we're using them, we might as well invest a little bit in them and get, a little bit of a payout for using their service. So aside from all the other companies that we plan on investing in, they have a very strong long-term growth record. We're also going to be investing in companies that we use day to day, just so we can get paid to use them, basically. The platform that we're going to be using for investing, at least as of right now, is called Robinhood. It's totally free. There's a link to it in the description if you guys are interested in trying it out yourself. If you sign up, you get a free stock and I get a free stock. But our general criteria for picking out stocks and ETFs and REITs or whatever is, like I said before, we're looking for things that have a long track record, at least like 5 or 10 years into the past, of consistent growth year over year. Obviously, in the stock market, things are going to be up and down, But overall, generally consistent growth. Hopefully at least 10% is what my wife and I are looking for. Depending on what it is, we may go a little bit lower. A REIT, for example, REITs are known to pay out pretty large dividends. So let's say we invest in a REIT that pays out like a 8% dividend, but the growth rate year over year is only like 6%, something like that. So 6% growth per year, but an 8% dividend payout on top of that. So total, that's like a 14% yield year over year. That would be something we would probably invest in just because the growth, including the dividends, is pretty crazy. If we're not talking about REITs, what we're generally looking for is a dividend yield of 2% or more, 2, 3, 4, 5, and companies that have good fundamentals, increasing income, increasing net income, the company's assets outweigh their liabilities, they have cash on hand, limited short-term debt, and plenty of profits left over to pay out their dividend yield. So what I have behind me on the computer screen here is our actual $1,000 investment portfolio right now. I'll be going over that in a second, and I'll also be going over a website that I've been using a lot and that you guys can use also to kind of like research companies, and I'll show you pretty much like exactly where I've been looking to research fundamentals, dividend payouts, and things like that. All right, so I've got Robinhood pulled up on my phone here. So I'm just gonna scroll down and pretty much show you guys what we're invested in so far. Ally Bank, we have 10 shares in Ally Bank. This is one of our banks that we bank with. We love them, they're amazing. So 10 shares, $136.80 in equity. It has a dividend yield of 5.01%, which is very, very good. They have a strong, at least over the the past 5 years or so, they have a fairly strong growth record, 57.95% or so before the crash. Combine that with the 5% dividend yield, we felt this was a very good company to buy into, especially since we use them. AT&T, as I said before, is our next one. We've got about $241 invested with them. 8 shares. AT&T's dividend yield is about 6.68% right now. Their dividend yield has been consistent and consistently growing into the past, so I felt pretty comfortable investing into AT&T, even though, like I said before, they've been just kind of trading sideways for a while. We're using them though, and their dividend is insane. So NRZ is a REIT, it's a real estate investment trust, and it's been one of the more popular ones from what I've researched. It used to have a crazy dividend yield. Now it has a dividend yield of 3.84%. The dividend yield used to be like 10 times that. But with the recent crash, they've cut their dividend yield by about 90%. So I don't think I'm going to sell this company. I have 42 shares. I bought into this company a lot, almost $200 in equity. I'm not selling this yet, but I don't think I'm going to buy any more. I'm going to wait and see what happens with them financially. If they go bankrupt or whatever, which I don't really think is going to happen, but if they do, $200. Next one is ONEOK. This is an energy company having to do with natural gas. So pretty strong growth record, at least over the past 5 years, as you guys can see. And their dividend is 11.83%, which is pretty good. The next one is BND, which is the Vanguard Total Bond Market ETF. I bought 1 share of this. Its dividend yield is 2.57%. Not as high as the other stocks ETFs we've been looking at, but bonds again are somewhere a little bit safer, less risky to put your money. And I've got $87.68 in BND. The next one is XSLV, which is like an S&P 500. Companies that are classified as a small cap company. And these are specifically low volatility companies. So again, at least over the past 5 years, Robinhood, I wish Robinhood showed you like more time than 5 years so you guys could really get an idea of like the long-term growth record. But this is an ETF. It's managed by certain people. Basically, I'm trusting them to place the best stocks and things in here to get the best growth and whatnot. This has a dividend payout of 4.81%. The next one is Store Capital. Store Capital is another REIT. I have got 1 share in this, so not very many. I'm kind of holding off on buying REITs right now because there's so much that's up in the air with the real estate market at the moment. But this one, very good growth over the last 5 years or so, and its dividend payout is 7.55%. So that's all my wife and I have invested in right now. As you guys can see, we have a lot of REITs, a couple of ETFs, and a couple of individual stocks. So nothing crazy. We're not very well diversified right now, but I mean, we've only invested $1,000. Our plan is, like I said before in the video, have a lot more ETFs, a lot more like whole market ETFs. We're looking into VOO, a couple more Vanguard ETFs. And I can actually show you guys down here. So these are all the ETFs that I'm looking at. I'm not sure if we're going to be buying into all of them. QQQ, Charles Schwab, a lot more Vanguard. We've got SPY right here that I think I mentioned earlier. These are all the bonds I'm looking into. I've kind of like bookmarked these, if you will, in my Robinhood app, just so I can kind of go back and research them as I feel like I have time to. REITs, I've got a couple more REITs in here that I want to look into that are, separate from the ones I've already invested in. Healthcare, I've got one healthcare company in here that I want to look more into. I've got a lot of tech companies. Now, unfortunately, these tech companies don't have a high dividend yield. However, tech companies seem to be growing like crazy. And although like they're not going to pay much monthly, some don't pay anything at all. I think these would be a great addition to our portfolio at some point in the future. My belief is they're going to keep going up in value. All right, telecommunications, AT&T is on there. Verizon is another one. I may buy into Verizon. I don't know much about this company. They have a pretty good dividend yield as well, 4.23%. I need to research more of them, but I may buy into them a little bit in the future. We've got a few companies for financing and banking. Main Street Capital is one that I would like to buy into because they have a really good growth rate as well, and also a very nice dividend yield of 9.41%. JP Morgan Chase, Bank of America, as well as Ally that we already bought into. Energy and fuel, these are some more that I want to look into. Diamondback Energy, Valero, One Oak we have, and Next Era Energy. All companies I want to look more into. Crypto is on here. I don't think I have any plans to buy Bitcoin right now, although I just keep it on here because it's fun to track every now and then. And that's it. I have some non-dividend paying stocks down here. Most of them are tech companies. So all in all, that was about 55 stocks, ETFs, REITs, everything combined, about 55 different things that I'm looking at into investing into in the future. But onward to the rest of the video here. I'm on a website called Seeking Alpha, seekingalpha.com. This is the website that I use to kind of research all of the fundamentals, dividend growth, payout ratios, that sort of thing on the companies I'm looking at. So if we go up to the search bar right here, if we want to look for a company, for example, Realty Income Corp, that's one of the companies I'm looking into. Their symbol is O. Press enter. We get their information right here. So this is kind of a growth track record of the past up until now. We have a 1-year track right here. Robinhood goes up to 5 years. I'm really looking at 10 years. That's just my preference for all the companies that I'm looking into. So you can see that their 10-year growth record is pretty strong. And this is a REIT. Again, this is not a company. This is a real estate investment trust. If we go over here to the dividends tab, we can see kind of their dividend payout ratio. They pay out 81.1% of their income. So that leaves them about 19% profits to work with. If we go over to the dividend growth tab, this is a tab that kind of explains how much the dividend is growing year over year. And we can kind of see a representation of that down here. I don't really look at this tab as much as I do the dividend history. If we go over to the All button, you can see there's a strong track record of dividend payouts and increasing dividend payouts over time. And also, as you can see on the kind of, as we're mousing over these dividend payouts, you can see this company pays out monthly, or this REIT pays out monthly. So these are the dividends. If we want to look at kind of their balance sheet, their fundamental data. Okay, so the key data tab is where you can see kind of like all their fundamentals and balance sheets and things like that. Really, the only couple of things that I look for here are total revenues. And generally what I'm looking for is that their revenue is increasing year over year, or it's not decreasing drastically. So for Realty Income Corp, you see that, December 2013 or December 2015, they had, this much revenue, and it's increasing year over year. And this is in millions of US dollars, by the way. Here's operating income. So their operating income is, right here. Net income is really the next thing that I look for. And again, with net income, I just kind of want to make sure it's increasing or not decreasing drastically. So we start off with, $283.8 million in December 2015, and then it's increasing ever so slightly year after year from that. If we want to look at more fundamentals, we can look at their balance sheet. This kind of shows us like how much debt they have, how many assets they have. So we have, real estate assets here, other assets here, total assets. This is more what I look at the bottom. So total assets, again, increasing year over year over year. Liabilities and debts, that sort of thing is right down here. So if we look at for December 2019, that's this column. Their total assets is this number. Their total liabilities is this number. So they have many more assets than they do liabilities, which is good. But yeah, that's pretty much all the things that I look at right now. And there are other websites you can use. Yahoo Finance is really, is another great website to do fundamental research on companies and things like that. Seekingalpha.com, if you guys want to check it out, it's free. You can create an account. I created an account, but I don't think creating an account gives you all that much more data. There is a paid version. I don't pay for it though, but there's a lot of info that you can just get for free and do research yourself on for free. All right, guys, well, that's going to wrap up the video. I hope you enjoyed it. If you're interested in following our future investments and our investment process, hit that subscribe button, follow our journey. And with that being said, we'll see you next time. Fall asleep. All right.